I always feel a little silly because they're working in the back room and they can hear me sitting here talking on the live video.
Sure.
So, hey everybody, how y'all doing? Welcome to our live video today. This is Josh Knoll, Gulf Coast Financial Advisors, coming to you from downtown Fairhope, joined by Will Stye. He is a fellow Gulf Coast Financial Advisors member, coming to us remotely from Nashville. Will, how you doing?
Good afternoon, Josh. Doing great.
Great. Well, we got the live video properly set up because I just got notification from my phone that we are live. We're live on 3 platforms. And Will, what we're going to do quickly today, you and I have got a couple things. One is already out there into the public view. The other is an upcoming webinar we have next week. We're going to touch briefly on both those. First, though, let's talk about our upcoming webinar. It has a wordy title because God knows I have my difficulty with keeping things condensed. I didn't know how else to say it. So the title of the webinar is It's Not Too Late, 4 things that Gulf Coast area business owners can do before the end of the year for 12/31/20 to potentially save money on 2020 taxes. Those in the industry will notice that I added a lot of qualifiers there. I mean, the nuts and bolts of it are, what are some things that you can put into place now so that when you go to file your 2020 taxes and beyond, you've got the potential to maybe realize some tax deferrals, some tax savings. So, Will, that's going to be Tuesday at 2 p.m. while you're here in town. You want to add anything to that, the webinar we got coming up with your CPA background?
Who doesn't want to save on taxes? Come on.
Right. Yeah. I mean, that's the webinar invite I put out is, unless you enjoy paying, a lot of taxes, it's fine. You don't have to join the webinar. But, and then Will, to register for that, before we get too far into the details of the webinar, to register, that is going to be found on our brand spanking new, just released business owner landing page that you can find on gulfcoastfa.com. And then once you go there, you can find the link, or you can just type in /business-owner-center. There's going to be some concepts for successful business owners and professionals to use that can create some additional tax deferral options, particularly things maybe above and beyond the normal road retirement of 401k plan. So you can find the registration for the webinar link there, and then you all join us Tuesday at 2 p.m. So Will, what I want to do very quickly, because you are really kind of the genesis of some of these concepts, introducing that to Gulf Coast Financial Advisors, and then allowing us to introduce that to the business owners and professionals that we work with here in our part of the coast. But what I'd like to do is just let's name the topic. Let's give them just a little preview of what we're going to dive in a little deeper on the webinar. And then we'll wrap up and do another call to action and see if we can get some folks registered. So, Will, the first thing we're going to do for someone that is looking, has had a successful year, 2020, or maybe just had a normal year, but that has ended up being productive, and it's coming to the end of the year, looking at potentially a sizable check that they have to write once they go to file their taxes. Sometimes this is the time of year you can speak to this with your CPA background, where occasionally a CPA would encourage someone to buy a piece of equipment and maybe realize some depreciation before the year. Yeah, I've had many peers show up in a new truck come December. Well, I bought it. My CPA told me I need to get the depreciation, right?
Yeah, auto dealers love it. That's for sure. Equipment.
Yeah. So, I mean, and that's, hey, to be fair, that's one way to do it. You can depreciate things like that. The things you and I are going to be talking about on the webinar, though, are going to be hopefully assets that appreciate versus depreciate. And the first of that is going to be for business owners looking at setting up something that can give them some really horsepower for tax deferral in 2020 would be setting up a SEP. So if you don't mind, let's just talk a little bit about a SEP, compare and contrast a little bit to the other IRA examples, and then we'll move on to topic number 2.
Sure, Josh. SEP is essentially self-employed person pension. You're setting money aside, tax deferred, you get a break on the income taxes, and it's intended for purposes of retirement. There's that pesky age 59.5 rule we have to contend with. But it's the first step really for anyone who can do more than the $6,000 IRA contribution limit. The limit on a SEP would be 25% of your net self-employment income. And so for a lot of people, that's a good start as far as how much they can sock away and what they're comfortable socking away.
Very good. Wonderful. And so on the webinar, we're going to dive a little deeper into that topic. We're going to get you some particulars on that, and we're going to compare and contrast to the different options that you may have, and give you some details on that. Number 2, Will, kind of goes along with that. This is something that you to give full credit where credit's due. you brought this concept. It was something that I knew, but I didn't really have full understanding of how the details worked. And as we started working over a year ago, you said, hey, some of your business owners are, look at the income, look at their K1s, look at what their pass through is generating. Now you tell me, do you think even a fully funded 401k with profit sharing at X amount of dollars per year, is that going to replace that income, that level of lifestyle and retirement? I said, well, no, I guess that's fair. It's a fair point. He said, well, some of your business owners, Will said this, are going to have an appetite for additional tax deferral and retirement planning above and beyond a fully funded qualified retirement plan. So, Will, we're gonna narrow down the webinar to one topic with the understanding, folks, that there are more than one ways to skin this cat, and we've detailed that on our new business owner landing page. But for purposes of the webinar, we're going to be talking about cash balance plans. So, Will, with your pretty extensive experience with these plans, give the viewers just a little taste of what we're going to be talking about with those.
So, and thanks for noting that, Josh. You've already said it, that when a business owner oftentimes will think of, if they've already matured past the SEP IRA, they're in a structure where they have a 401k plan, not only for themselves, but for some group of employees, full-time employees typically. And they say, this amount that I'm setting aside, and these are folks that are above $250,000 typically on an average annual income. That roughly $50,000 they will put in the 401k plan, that just won't accumulate fast enough and grow large enough for them to, essentially replace that $250,000 payroll that they're having income-wise coming in each year. So the cash balance strategy, we've seen a resurgence in this particular idea concept over the past 10 years in particular, and that is in certain situations, a business owner would have the ability to set more than, let's say, the typical $50,000. And then the amounts start to seem, or they do get large pretty quickly, particularly if I have a business owner that's age 50 or older, because certainly once you cross over that threshold, as I did this past year, you really start wondering, hey, when am I going to be able to retire and what's that going to look like? The timeline is shortened. If I was shooting for 65, I've got 15 years now as compared to. So the contribution amounts grow pretty sizable. In some cases, we're seeing where a 62-year-old might be socking away $250,000 a year, maybe upwards of $300,000 a year in their cash balance plan to allow for them to get prepared for retirement. So certainly, really, ultimately, cash balance serves as a tool, a concept, a strategy that we would help them deploy that would accelerate and really put some horsepower behind the retirement savings vehicle.
Very good. All right. Thank you, Will, for that. So we got two more quick topics to go over. For those of you all that are just joining us on this live video, I know you tend to pop in and out sometimes on these news feeds. I'm joined, this Josh Knoll, Gulf Coast Financial Advisors, joined by Will Stye. We're talking about our upcoming webinar hosted next Tuesday at 2 p.m. The link is on my website, gulfcoastfa.com, where we're going to be talking about 4 concepts that business owners and professionals can use to defer taxes when they go to file in 2020 and beyond. This is not just a one-year strategy. All right, Will, next up, let's talk about, this is going to be kind of an interesting one. I'm actually looking forward to this on the webinar with the market and the historic levels of volatility that we had, and with sometimes what you would say common sense getting thrown out on why certain positions did well and certain positions didn't. Tax loss harvesting. So if you've got positions that maybe in 2020 didn't recover like we saw most or big chunk of the market do, maybe they've been underwater for a while, but you've also had growth in other parts of your portfolio. Maybe there's a concept to look at. Hey, do we need to look at maybe doing some tax loss harvesting? Would you like to give a little 30-second, 60-second intro on that?
No, sure, Josh. Thanks. So for folks, and let's get specific here as far as industries are concerned, those in the leisure and entertainment, maybe it's a restaurant, national brand restaurant chain, maybe it's a Carnival Cruise Lines comes to mind, right? Those industries that have been really severely impacted by COVID, coronavirus concerns, and understandably so, they've taken it right on the chin. Airline industry. Any of those things, sometimes people go through their portfolios, they may be holding a selection of individual stocks. They have positions, they own shares of stock that aren't what they paid for them. They are significantly less than what they paid for them. A common practice we'd encourage any investor that has that type of portfolios to go through and determine which of those positions that have those losses to go ahead and sell out of those positions, and at the same time sell positions which have had gains. Maybe they had the foresight to see how DocuSign would become a really big player in this work from home environment, and DocuSign's up almost 300% this year. So there's a way to offset the gains they would have that are otherwise taxable as capital gains tax rates, offset those gains with losses by other positions within the portfolio.
Very good. All right. And so then lastly, number 4 topic, Will, the first 3 topics that we alluded to kind of go along with someone that maybe has looking at establishing a retirement plan. In some cases, they've already established it and they've kind of reached its limits. This is going to be something that may be compelling to a business owner that maybe they have no retirement plan in place for them and their employees, or maybe they've got a simple IRA. The Secure Act. Now let's make sure on the webinar, we're going to clarify the Secure Act and some of these things was in place before the CARES Act. I know even myself included, sometimes those 2 acts there seems to be a little bit of bleed over, but for this particular webinar and this discussion, the Secure Act is offering a tax credit specific to startup 401k plans. Let's talk a little bit about that.
Sure. So prior to Secure Act, there was an incentive for business owners. And if we go back on that timeline of, hey, I had a SEP IRA and I have employees now, I'd like to do something for them as well. They've transitioned to a 401k plan. Tax credit previously was $500 flat. Hey, if you spend $500 in retirement plan costs, you'll get a $500 credit. That actually dramatically increased with the Secure Act in December of 2019. For any plan you start after that into 2020, 21 and beyond, it's actually a increase of $250 per eligible employee, not to exceed a maximum of $5,000. So if business owners has 20 people and every one of those people are eligible for the plan, even if they don't participate in the plan, there's the ability for that business owner to realize a $5,000 tax credit each year, starting with the first year that they begin the program and continuing for 2 additional years. So if you take 3 years at $5,000 a year, that's $15,000. If they go a step further, and in some cases it'll make sense to do this, and part of our role is to make sure that the business owner has a handle on exactly what their cash flow commitments are and how this will be structured. But if they take a next step and allow for an automatic enrollment for participants, they pick up an extra $500 flat there. So essentially they have a $5,500 a year tax credit coming to them. And if you do the math on that over a 3-year period, that comes out to $16,500. And again, credits are much more valuable than deductions. Credits are a dollar for dollar elimination of your tax, whereas a deduction has an applicable tax rate that maybe it's 25, 30, 40 cents on the dollar. But still, credits are definitely something that every business owner should take a look at if they're considering implementing a plan.
Very good. Very well said. Well, Will, what we're going to do here is let's go ahead and invite everybody. Please register. You can go to my website, gulfcoastfa.com, go to the Business Owner Center. You'll see a picture, a graphic of the webinar. And if you click that, you can register there. The webinar is coming next Tuesday at 2 p.m. Central. And join us there. We're going to dive in a little deeper. The webinar will probably go about 45 minutes. We will have it open for real-time questions and chat. And as Will said earlier, if you've had a good year, or even a productive year, maybe something similar to what you've had in the past, and you're looking at some sizable tax checks to write, and you're okay with that, well, don't join the webinar. We're okay with that. But if you would like some ideas to maybe cut down that burden for 2020 and beyond, join us. We got some pretty good concepts to discuss. They're time-tested, true concepts, and I think you're going to enjoy it. Lastly, and you don't have to wait till the webinar to strike up the conversation. It is December 3rd today, 12/31, 20 is coming quick. If you've got some things that are pressing now, feel free to reach out to us. We are blazing full shoulder into it till the end of the year, and we're here to answer any questions and help you get some things implemented. Will, do you have any final thoughts before I read this? I need to read a disclosure, and we'll close this live video down.
Terrific. Hey, one thing I would note, Josh, as you reminded me about December 31st, there are things that when we turn the page on the calendar and find ourselves into January of 2021, we can't do anything about. Right. However, in this idea of starting something new with regards to maybe a 401k plan or the cash balance, Part of the unique feature in the Secure Act was an extension of the ability to implement that. So typically, come January of any year, calendar year wise, we were saying, hey, sorry, wish I'd talked to you the last, a month ago. In this case, we'll have up until the filing deadline or the date of extension for the business owner to cause for a change, to perhaps implement something new. That's a big difference than what we've experienced in the past. And the Secure Act, this is really the first year that we're having that opportunity. So keep that in mind. There may not be, eventually there will be a deadline that passes.
Right.
There's more flexibility as we look into the next 3 or 4 months.
Well, perfect. Well, I want to thank you all for joining us. Again, Josh Knoll, Gulf Coast Financial Advisors, Will Stye, part of the organization working with busy business owners and professionals down here along Gulf Coast. Will, if you will excuse me, I got to put on my readers and read this disclosure, and we'll wrap up this live video. So video information provided is been prepared for informational purposes only, is not intended to provide and should not be relied upon for tax, legal, or accounting advice. This information is not complete analysis of every material fact regarding any strategy. It's only provided to provide insight into the opinions of us two, Will and I. All information presented for educational purposes only is not an offer or solicitation for the sale or purchase of any securities. So, Will, with that said, you all get out there, register for the link, and we will see you next Tuesday at 2 o'clock. Will, thanks for joining me. Everybody have a great day.
Bye-bye.